Well, Santos shares slumping this morning after Abu Dhabi's XRG withdrew its $19 billion offer for Australia's largest LNG producer, ending what has been months of speculation over what would have been one of the country's largest energy deals. Santos shares down double digits right now, 12.42%. Last traded. A consortium of investors led by XRG, which is the deals arm of the Abu Dhabi National Oil Company, made the $19 billion offer in June, but confirmed late Wednesday it would not proceed with that takeover. A source familiar to the matter told CNBC that Santos was, quote, inflexible. CNBC also understands the consortium had concerns around value, tax and the timeliness of disclosure. The source also described the Santos negotiation team as, quote, unrealistic, but also said this was not the outcome that XRG was hoping for. Santos, for its part, said that the XRG consortium, quote, would not agree to acceptable terms which protected the value of the potential transaction for Santos shareholders, noting disagreement between the two parties on the time frame as well. Let's unpack this with Saul Kavonic. He's head of energy research at MST Marquee, joining us live out of Sydney, also following this slump in Santos shares. So welcome to the program. Both Santos and XRG accusing each other of being disingenuous here. As you've just heard, our sources say this is really about a breakdown of trust. So what went so wrong?
As you say, both sides are pointing the finger at each other about being disingenuous through this process, both to each other and frankly to the market. And the truth is they might both be right, and both parties have conducted themselves with a level of disingenuity here. So you've got those items that you talked about, with both sides have pointed to as the reason for this deal falling over. But fundamentally, if you look at these items, you know, in the scheme of things, they're actually probably quite minor. And actually what's happened here is, underlying all of this, there's been a complete breakdown of trust between the two parties over the course of this due diligence process. And there's probably been a fair degree of value erosion across a number of features, which has taken a deal that was never going to be straightforward and just ultimately made it too hard for XRG to continue here. Now, this is the second time that a bidder has walked away several months into a detailed due diligence process at Santos in as many years, and that is raising red flags with investors about what skeletons might be lurking there to see these bidders walk away after taking a peek under the hood.
Indeed, and a source familiar also told us that XRG was concerned around issues like valuation, for example, as you say, but also tax and the timeliness of disclosure. So just on this issue of valuation, do you think the market has been too generous in valuing Santos, particularly around the LNG portfolio and in particular PNG and GLNG?
Yes, I think there's real risks that the way the market externally is valuing some key Santos assets is more optimistic than industry itself would value these assets once they have the full picture and the details. In particular, a few areas which I think pose risk is the future spend and production outlook in the PNG LNG asset, which, while being a very good asset, may not be as good as many in the market think it is. There's also the cost to sustain production levels at the GLNG asset in Queensland in Australia, as well as what the upside really looks like for life extension at the domestic Cooper Basin joint venture asset. On top of that, there's also billions of dollars in decommissioning liabilities, including for assets which no longer produce anymore, where those numbers could be underbaked and drag down the valuation as well once the engineers have had a good time to comb them over.
Indeed, and from the Santos perspective, they have said that the XRG consortium wasn't going to take enough responsibility for the regulatory risk. And also at the same time here, Santos has argued that they wanted better commitments when it came to domestic gas. Do you also see those issues as critical sticking points here?
Well, it's important to remind XRG dispute those assertions and say that they were actually willing to make very significant domestic gas commitments. And it's hard to believe that either of these parties weren't aware that they're going to have quite a long and protracted approvals process for what is the largest cash deal in Australian history, covering multiple sets of critical infrastructure in Australia that could fall into the hands of a foreign government. So there's a lot of finger pointing here, and I think what it really points to is more lack of trust than getting too focused on what the details of each accusation is here. When you have a deal of this scale, if the parties get to a point where they don't feel they can be transparent with each other and work with each other in a trusting manner, it's just simply not possible to get any kind of deal over the line. And like I said, it's not the first time this has happened in the case of Santos. Woodside also walked away from the altar to Santos's surprise not a little more than 18 months ago in very similar circumstances.
So walk me through what's going to happen next. Do you think another bid for Santos is possible at this point, given the two failed takeover prospects that we've already seen? What is obviously a concern around trust issues inside that business, and of course, whether or not anyone else would emerge willing to pay a premium, given just how far the stock has sunk today. So is Santos still for sale?
Look, Santos has been trying to sell itself for a few years now. I think there's every single major oil and gas player in the world has run the rule over Santos in some capacity. But the fact that we've now had two bidders walk away in the middle of due diligence could act as a deterrent to any other bidders out there. Now, you can't rule these things out completely, of course, but the possibility of another bid, or certainly another bid anywhere near the price point that XRG had proposed, does look quite unlikely. That said, this is probably going to lead to a bit of a shake-up at Santos, even with the deal falling over. I think you might see increased pressure from Santos investors. We might be looking for a refreshed governance and leadership here and strategic outlook, because there's quite a lot of frustration that Santos' share price has been trending sideways for a number of years now. And allowing two bidders to slip through their fingers like this in as many years is really going to see some of that pressure mount. You'll see, I think, a bit of pressure return to look to split the business up between its export-focused business and domestic-focused business, which could provide an opportunity for the likes of domestic gas player Beach Energy to perhaps acquire some of the domestic-focused assets and leave Santos as a simpler export-focused business.
So let me ask you point blank, should Gallagher resign? Is his position even tenable at this point?
I think you're going to see a lot of investors questioning the tenure of the board and leadership of Santos after this debacle. And it's been 10 years, and perhaps a refreshed perspective is needed here for the next chapter of Santos to be successful going forward and help reset some of the relationships, not just with potential bidders, but joint venture partners, stakeholders like unions and the government, where Santos has been increasingly on the nose over the last few years, and being able to reset some of those relationships could be an integral part of Santos' next chapter and being able to build some more momentum back with the market.
And just quickly here, what's the next big risk for Santos shareholders here? Of course, we have said that XRG will continue to try and maintain good relations with Canberra. It seems like they still have an appetite for Australian assets. What about anyone holding Santos shares today? How should they be thinking about this situation?
Well, look, right now we're seeing churn out from some event-driven funds who are here for a deal, and we need to let that pass through. I think the key question for investors now is Santos has two major growth projects due to start up over the next 6 to 12 months, being the Barossa LNG project and the Pikka Alaskan oil project. But once those projects are up and running, our concern would be that the free cash flow and dividend outlook may be below peers at the same time as Santos has actually got no further production growth ahead of it. And if you can't provide a compelling yield play or a compelling growth play, that can put you a little bit on the nose with the market, and we could see some pressure on the share price.
Okay, we'll watch it closely. Saul, really appreciate the conversation today. Thanks for being here. Saul Kavonic there from MST Marquee. You could read much more about the story over at CNBC.com, plus get the latest on the market reaction to the Fed decision today as well.